Good evening, friends.
Good evening, sir.
Good evening to everyone. Happy Vijayadashmi.
Thank you, sir. Same to you.
Thank you, thank you. One more minute is there, then we can start.
Sir, this weight will be the same for online exam or what? Any idea, sir?
Come again?
The weightage of chapters, sir.
Ah,
Will it be the same for online exam or it will be different?
yes, it should be same, but yes, in the examination it is up to the examiner. What he wants to ask, he will be asking. He will not be very strict to the mark distribution given by the institute. That is another one. Is there. Almost all they will be going with about 85%. They will go with the institute markings, and yes, whatever we are doing those years.
Sir, but we are having only totally 5 classes, sir, before the end of the next month. Sir.
Yeah, they will increase the classes in month. So you people have to tell me. I have already told them. So you people
There
have
is
to.
no response from them, sir.
See, everybody has to one application you have to prepare and you send to the person who is in charge for the studies. That is, I'll tell you, for whoever is in charge for the students. So to them you have to send. I shall share some numbers with you, but I'll put it in the. Okay.
So
He's the person who is dealing. He is not the person who is supposed to decide. He is the person who is dealing with the oral classes. So I think he must be listening also. He is the host also now. Mr. Vishal. I shall share his number and you can talk to him. And together, when you put your demand, then they will be accepting. Definitely, they will be accepting because at least we have to have 22 classes altogether.
how much, sir?
22 classes. In November, we had 2 classes, and including today's class is fifth class of the October. So, if they want, they can increase number of classes.
So similarly,
I'm not getting you.
Similarly, sir, that section D, financial reporting, is
Section?
about 25% weightage.
Okay, section D.
And numerical developments in financial reporting.
Government accounting, you have to do is full of theory. Government accounting, coming back. Yes. Development financial reporting and other items, 20%. The recent trend in the financial reporting is totally, it is what is IT development that is discussed in this chapter. Recent
problems are there, sir.
Valuation accounting and reporting financial and others in days. Yes, I'll try to do. Share-based account, I think we have done it. No, we are not done. Okay. Share-based account, we will do it if we are not done. And reporting through XBRL, this is also a theory.
Theory are not required, sir. Only problem area.
Yes. So share-based accounting is the then ESOP and other things and all. Okay, that is not going to take much time. Might be 1 or 2 classes that we over. So yes, let's see.
So similarly, that AS are only numerical problems only.
Yes. The only whatever the problems are there in the book. Otherwise, we can't complete because otherwise my classes it starts about 6 months in advance. So I go each and everything my own problems and all I do with my students. Those who are coming. Even the CA class also it goes for 6 months. It is not for 3 months or 2 months time they rush up and do it. So very systematically those classes are done. So here, this is the first time we are doing online, so little bit of problem. So later on in the month of November, they should increase number of classes that you have to talk to them. You have to talk to the concerned people, and yes, they will be at least 22 classes they will be giving. So in 22 classes, yes, they can cover about 80% of the syllabus.
No, why are you doing it?
Okay, right. Shall we start now? Now, how many people are there?
Hey, Prem.
Okay. Shall we start now? Shall we start? Okay, I'm starting. Nobody's answering. What happened?
Yes,
Am I
sir.
audible? Yes. Okay, the last class we have done with how we have to proceed for the subsidiary and holding company. We have done that. And now we will be doing the rest of the things. Okay. So para 7 is the most important one. If you understand the para 7, what is given in page number 214, then we have done with almost all consolidation because that is only the thing which says that how we have to do it. And calculate.
Sir, can you kindly explain again? Sir? Can you kindly?
Yes, you want me to explain?
Can you
Para
kindly?
7?
Can you kindly explain that point 7 again, sir?
Okay, right. Who can tell now? Explain. Any one of you can explain para 7?
Yes, sir.
Yes.
I will read out.
They're
Uh,
not reading
and
out. What is that para 7? Can you?
it
Brahma?
says that
Yes.
non-current items are carried in the consolidated balance sheet at acquisition date for value plus subsequent change in book value. However, for current items, the
You are
revaluation profit loss
uh,
on the acquisition date is reverted through post-acquisition retained earnings. This is most important, I think.
you are reading
The current items.
You are reading the paragraph. I don't want you to read the paragraph. I asked. Yes, Brahmpalji. Brahmpal. Okay. Not answering. Yes, Sheetal.
Yes, sir. So what I understood is that As far as our assets, the identifiable assets and liabilities go, we need to record them at fair value in the first
Okay.
place.
Okay.
And then secondly, then there is a split between non-current items and current items.
Hmm.
So wherever there is non-current items, we
Hmm.
take the fair value on the date of acquisition,
Hmm.
and whatever is the difference during the year between in the book value, so that is adjusted, means that is added or subtracted to it, to the fair value on the date of acquisition, and
Hmm.
the resultant amount we need to put in the final consolidated balance sheet.
Reporting date balance sheet. Am I right?
Right, sir. Yeah,
Okay.
reporting date balance sheet.
Okay.
And then, sir, for that is for non-current. Now, current assets and liabilities, what we did was, okay, now that is something I can't explain, sir. I'm sorry. I'm getting a little confused as well.
Right. Okay. Right. See, there are two. Anand, are you there or not? I think he's out.
Sir, I am very
I
much there.
think so.
I am very much
Acha,
here.
acha, acha, okay. Okay. Because your the mic is not visible here, so I thought that network problem or something like that. Okay. Right. So this is here on the date of acquisition. This is things are there. In this date, we have to identifiable as liabilities. So on the date of when we are consolidating, we have to recognize this way. Whatever this value is there, in this value will be okay. And on the date of reporting, balance sheet date. The reporting date means the day you are closing your account. The day is the sure. There is some problem. And my sharing. I don't know why. Okay, I have written it. I will come back again. I will leave the meeting and come back again. Okay. Because it is not getting shared. Huh. Okay, now it is. Okay, right. On the date of reporting, what we have to do, this is what to do. Okay. Date of reporting, the value will be non-current, non-current. Value on the date of acquisition, plus or minus non-current items. Again, sharing properly, there is a problem with the connectivity. Could you see this? The screen is shared now. Fair value on the date of acquisition plus or minus change in book value. Am I audible? Am I audible? Am I audible?
Yes, yes, sir.
Yes, sir.
Oh.
You're audible.
So this is for non-current items. For the current items, the difference between fair value and book value. Date of acquisition should reverted. If the value reverted, book acquisition profit. End of the year. Okay. And closing book value shall be considered. In the closing balance sheet. Okay. So this is what we have to do it. Sir, the last class you didn't tell us what we have to take the closing book value. I didn't tell you purposely, otherwise you won't understand what is the flow happening, how you are getting the closing one, you will never understand. Suppose what we have done in the last class, suppose current asset is there, book value on the date of acquisition is 1 lakh. This is acquisition date, reporting date. Reporting date 2 lakhs. Fair value 120,000. How much the value is increased? 20,000 is increased, isn't it? The value increased is 20,000. What we will be doing here? So here we will be taking acquisition date. We will be taking 1,20,000. So end of the year reporting balance sheet. What we have to do? 120,000. 20,000 was increased minus 20,000. 20,000 is what? Adjustment. Reverse. Reverting to profit and loss account. Okay. Then the difference between the book value and this one plus 1 lakh. Difference between the book values closing and opening 2 lakh minus 1 lakh. And we total it. How much it is coming? Closing balance will become. Closing book value will become. I think whatever the increase in the fair value is there, that we have reverted to. That means we have transferred that profit to profit and loss account. Post acquisition profit, we have to adjust from that. So whatever increase was there, that we have reduced it. So we have reverted back. So this will decrease the profit. That's it. So basically, finally, we will be getting the end of the reporting period. End of the first year, after acquisition on the balance sheet date, the book value will be considered for the current items. So this is what we have to understand. Okay, getting it? Are you getting it? Yes, Anand. Please unmute and speak.
Yes, sir.
Got it?
Yes, sir.
Okay. Right. We'll go for the problem. Now we are little experienced with the consolidation. So this problem should be very simple for us. Should not create any trouble. Okay. Go for illustration 2. Yes. Go on.
Yes, sir.
Yeah. Please read.
Yes, sir. Company P Limited acquires 60% shares of Company S Limited on 1st April 2017 by issue of equity shares at fair value of 360, paid up value 100. The book values and fair values of the assets and liabilities of the companies at the date of acquisition and at the end of the year are stated below. The total comprehensive income of P and S in the year ending 31/3/2018 amounted to 60 and 70 lakhs respectively. Then the items are PPE, plant property equipment, investment in S, current assets, equity, non-current liability, and current liability.
Okay.
So we need to pass the entries for business combination under acquisition method and prepare consolidated balance sheet on 1st April 17 and on 31st March 18.
Okay, not under acquisition method, on acquisition date, and prepare the balance sheet on the reporting date. Okay, right. All journal entries, combination of acquisition method. What is acquisition method? The new thing they say, right? Anyhow, now here date of acquisition. Date of acquisition 1st April 2017. Share of control so here P Limited 60% and non-controlling interest of yes, that is 40% non-controlling interest. Now calculation of non-controlling proportionate identifiable net asset method, and another one is fair value method. So two methods are there. Calculation of NCI. Okay. The first one is identifiable. Proportionate. Identifiable. Net asset method. Okay. So fair value of identifiable assets. So how much is PPE? PPE is 700 given. PPE is 700 and current assets 300. total 1000 and identifiable liabilities. Non-current liability 300 and current liability 200. This is 500.
Outside liability.
I'm not getting you.
Sir, we are supposed to take only outside liability, no?
Non-current
Calculating.
liability.
We should take only current liability. Non-current liability also we should take. Huh?
Non-current liability is also borrowing. It's from outside. Only companies one is equity, nothing else. So rest everything is outside liabilities. Okay. Identifiable net asset. Identifiable net asset. $500 and MCA 100 into 40 by 100. 200. Any doubt in this? Any doubt?
No, sir.
No.
No,
Right.
sir.
Okay, right. Now, another method also I'll do, alternative method. That is fair value method. Consideration is 60% 60% holding. 40% will be 360 upon 60 into 40. If you do that, you will be getting, how much is this? 360 divided by 60 into 40 is 240. This is one. This is the, okay. Two methods, the values are two different values. Now let us pass the journal entry. Rather earlier method, AS20 when it was little, confusing one, but here they have made everything very simple. And since we are doing it newly, we might face problem otherwise. Very simple method, simpler than, if you ask me, simpler than the older methods. Okay, right. Now, what will be the entry? So on the date of acquisition we are making in the books of pre-limited. The entry for consolidation on 4/17. We are making the entry for consolidation. So What is this here? We have everything. We have to take it at which value? We have to identify the values at fair value. So PPE account debit. Fair value is 700. Then current asset account debit. Fair value is 300. Non-current liabilities. Non-current liabilities are 300. Current liabilities. Current liabilities are 200. To non-controlling interest. Non-controlling interest account. So one method 200. Another method we have 240. Sorry. One method we have 200. Another method we have 240. So what will be there here? 1000. This side is coming lesser than 1000. So gain on bargain purchase. On bargain purchase. How much this will be? If you are considering 200. You are considering 200, then the value will be how much? 1000 minus 700. 300. 300. And if you are considering 240 to be 1000 minus. Alright, I'm not taking the consideration. Sorry.
Consideration.
Consideration. Consideration. Consideration. Consideration was 360. Yes, 360. So here I have taken one. First one is 200. And second one is 340. There are two valuation we have done. Okay. Both are right. Don't write in the exam like this. Any one of this method you select. Okay. So now it should be goodwill, I think so. Yes. 700, yes. So this side is 360
So
plus
it will be 240.
240. Yeah. Okay. How much is this total? 300 plus 200 plus 200 plus 360. So it is 60 rupees. It is coming. Goodwill is coming. So goodwill is this is the balancing figure. Goodwill account. Debit. 60. Okay. And if it is 240, then it will be 100. 360 plus 240 plus 200 plus 300. So this is coming 1100. So that are considering 240, the goodwill will be 100. If you are considering 200, then the goodwill will be 60. Okay. Have they said that they are issuing the share capital, the book value, the fair value, assets, liabilities by issue of equity shares? Okay, right. The purchase consideration. Take charge of EC. Consideration account debit. Consider purchase consideration, anything can write it, but generally, as per 103, we write more consideration, and that is followed in 109 also. But if you write purchase consideration, doesn't matter. Okay. $360 equity share capital The equity share capital is 100, they say. So that will be 100, and security premium reserve. There are 268. So on the date of acquisition, we have to make the balance sheet. On the date of acquisition, standalone balance sheet and consolidated balance sheet, both the things we have to make it. Okay. So here, balance sheet, asset 1/4/2017. We'll be having here. They ask only the consolidated balance sheet. No, that also they are not said. Okay, right. So here particulars. Standalone balance sheet, consolidated balance sheet. Okay. Assets. Assets. Let's take this one. PP. How much is that? PP was 680. Investment in S Limited. Financial asset. Investment in S Limited. How much is that? Investment in S Limited will be 360, right? And current assets. Yes. Assets, non-current assets. PP. Current assets. We have to have one more. This one also. Um, and current assets. There is 420, which will be the total. and liabilities. Equity share capital. Earlier you had 500, so this will become 600. Other equity. So other equity here, I think it's the equity they have taken total amount, not equity share capital they have taken. Equity they have taken. So equity will be 500. They are not given equity share capital, given the equity. So no way we can consider differently. So this will be 860. Okay. Then non-current liability, NCL, non-current liability is 300, and the current liability is 300. So this is also 1460. Now consolidate balance sheet we have to do it. So this will be 680 plus 700. How much this will be? 1380. Okay. Goodwill, how much we have got? We have got two goodwill. One is 60, another one is 100. So 60, another one is 100. Okay. And investment in S Limited will not be there. Current asset will be 420 plus 300. 420 plus 300. This will be 730. Equity will be remaining same. It will be 860. And NCI will be equity will be 860. Non-controlled interest, we have two values. One is 200 and one is 240. 200 and another one is 240. Okay. Non-current liability 300 plus fair value. How much is the fair value? 300. So this will become 600. And current liability will be 300 plus 300 plus 200. This will be 500. So this is the consolidated balance sheet. And the total is 1380 60 plus 720 is 160 and 2200. Check it out now here. 860 plus 200 and 2200. Getting this, this is the consolidated balance sheet. One is 2160 and one is 2200. Is everyone, are you getting anybody is not getting, please let me know. This is on the date of acquisition we are doing. If anybody is let me know, please.
The first column you have not put. You have put only. Normally there used to be 4 columns. You have ignored the first column.
They have asked entry on the acquisition date only in the P limited. And it's been for the Q limited, and the subsidiary companies also show it standalone balance sheet. Okay. I have taken the standalone balance sheet of the P limit. That's it. Otherwise, we can show here the other limited, subsidiary limited, S limited also you can show. Okay, and this is sufficient. S limited as it is, we have to write it. No need to change anything. Only at the fair value we have to show. Okay. Anji, yes, Anand. Okay.
Sir.
Okay, right. Anybody else? Any other? The problem number one will not be there because that type of problem only we'll be doing the 110 for 2 hours. Such a big problem. That is the various things which are available in 109, various provisions. How we have to do that? That was illustration one. So we need not do that. 1% that only we have to do. More than that. Do like problem number one. Problem number one is to understand what are all the provisions are there in 110. So here we have to do only to this much only, because they are asked pause the entries business, even the two this one we have to any value, any way you can call you the NCI, either by consideration, purchase consideration, these are purchase consideration fair value method. Another one is based on the net asset, share of net asset. Either way we can do it. There is function, this is the way you have to do it, that is a thing is there. Both the ways you can do it. Accordingly, our balance will be the goodwill or gain on bargain purchase will be differing, and our balance sheet will be total will be different accordingly. Okay, right now on the reporting date, this is little bit tricky. Okay, so this only we have to do. Okay. Consolidated balance sheet. Not consolidated, standalone balance sheet was written. Balance sheet. As on close of 31st March 2018. This is on reporting date. First was acquisition date. This is on reporting date. Okay. So in the P limited one. Similar way. This is consolidated. This is standard. Same things will be coming. This is the asset side. And you have here, you have first is non-current assets. Under that, PPE, goodwill, and financial assets. This is treated as a fixed assets. Financial assets. Shares in test limit. And current items. Current assets. Current assets. Equity and liabilities. And here non-controlling interest will become. Then you have non-current liabilities. We do know what is a non-current liability. Current liabilities. They need not to give you what is the profit for the current year. They need not to give you. The reason is equity you see here. It was for the F limited, sorry, S limited, 300. It is increased to 370. Opening balance of equity is 300. Closing balance of the equity is 370. Therefore, 70 rupees is the post acquisition profit. Post acquisition profit is closing balance minus opening balance, 370 minus 300. So 70 is the profit. Okay, right. So you go for first is PPE. How much is the PPE? This is 720. And investment in S limited, 360. Total is 120 plus 360 plus 500. Equity given as 920. Okay, 920. Non-current liabilities, we have the same one, 1580. Now, before going to the consolidated, we have to see. Okay. Consolidated balance sheet. fair value. Acquisition. On acquisition date. Reverting to profit. Amount to be considered. Consolidated balance sheet. Okay, right. PPE and current assets. How much is the PPE? It was 700 was the fair value, and current asset 300. And how much we have to do that? We have to add back 60 because we have reduced 60. Now we have to add back 60 in the profit and loss. Okay, right. Here the difference between the book values will be 680 and 720. So how much is the difference? Change in the book value 720 minus 680 is 40 rupees is the difference. Sorry, 440 and 500. 60 is the difference in that. Sorry. Difference in the book value will be, book value is 500 and the opening book value was 440. So the difference is 60 rupees plus. Okay. And the difference here is how much? 400 and 360. Okay. Then non-current liability. Non-current liability, it was one and the same. And the current liability also, it was one and the same. So there is no problem. We can take it. Whatever the closing balance is there, as it is, we can take it. Okay. So here it will be 760. Here this will be, skip that. Here it will be 400 we will be taking. Non-current liability also taking. Non-current liability 300. And the change in the book value is 20. So this will be 320. Current liability, it was 200. And there was change in the book value is 10. Nothing need to be reverted back. So 300, 200. So this we will be using here. So 720 plus 760. We're taking 1460. Goodwill, there are two goodwills are there. How much is it? 60 and 100. Goodwill is 60, another one is 100. Okay, this we will not take it. Current assets, we have already. How much is this? Current asset 400 we have to take here. So 500 plus 400. Equity leverage, non-controlled interest. Of analysis of yes limited. post acquisition profit. How is the post profit? See here, check the equity. It was 300. Now it is 370. So 70 is post acquisition profit. And current asset, a reverted adjustment. So that is 60. Total has become 130. The total has become 130. So in this 130, how much share you are going to get? Share of P limited. So share of P limited will be 130 into 60 by 100. So 130 into 60% is 78. And share of non-controlling interest will be 130 into 40 by 100. 130 into 40% is 50. Using NCI on reporting date. Opening NCI. Opening, how much was the NCI? Opening NCI was 200. Minus 200. And add share of post acquisition other equities. $52. 252. So 240 if it is there, then this will be 292. Equity of P limited. Closing equity. Which is the closing equity is 920. Add share of other equity. Yes, limited. So this will be how much? 78. So now this becomes 990. Okay. So equity will be taking working note 3. This is working note 3. How much is this working note 3? Equity is 998. So 998. NCI working note 2. How much we have got? 252. 252 is one. Another one is 290. Non-current liability, there won't be any problem. Non-current liability is 320. And current liabilities are 200. Sorry, 320 plus 340. 320 is 666. And this is 320 plus 110. 530. Now total and share will be same percentage tally. 164 plus 900 is 2420 minus 998 minus 252 is 1480. This is 1480 mistake. It's 1480. The total is 1480 plus 60 plus 900 is 2440. 2440 and 2440 plus. If you take 100, then it will be 2480. 2480. So this is the way we have to do it. Any doubt? If you have, please kindly ask me. Any doubt? If you have, please kindly ask me. You should not have any doubt in the balance sheet on acquisition date. Do you have any doubt on the balance sheet on acquisition date? Any one of you? Any one of you?
So my connection got lost. I missed that in between while we were preparing that balance adjustment for consolidated balance sheet. So can you just tell whether we did anything for OCI? What did we do for OCI, sir?
We have not done anything for the OCI. What should we do for the OCI?
Okay, that's given to confuse us.
The comprehensive income they have given, total income 15,000, they have given other equities, and here they have given anything as equity they have given. So other here comprehensive in what they say here is comprehensive income of T&S Limited is 60 and 70. They mean to say that the current year profit, the other equities for the current year is 70. That is what they say. The profit earned during the year post acquisition period is 60 and 70. They say okay, nothing related to OCA and things. Okay. So
Okay,
they have
sir.
given us comprehensive income. It is not other comprehensive. Okay, right. So in the consolidated balance sheet, what we have to do, just they have to take value between the do it for the
Okay, sir.
non-current assets. So we have taken the fair value 760 pp and difference between the opening and closing values on the date of acquisition and on the date of requisition. The change in book value is 440, 60 rupees increase that we have taken. Okay. 60 rupees is the increase that we have taken here. This one we have taken. I think there is little problem with the network, and here we have taken 60 rupees. Second one, change in the book value we have taken as 60 rupees. Okay, right. So the total value has come, amount to be shown adjusted in the to be considered in the balance sheet is consolidated balance sheet is 760. Current asset, what we have to do, we have to take the fair value and change in the book value plus or minus and revert back whatever difference between the fair value and on the date of acquisition whatever book value was there. Date of acquisition book value was 360, fair value was 300. There was a decrease 60 rupees. When we are reverting back, it will be added. So because it was decreased, so we have added back 60 rupees. That has come. Okay. Then similarly, non-current liability, there was no change in the fair value in this one. So the closing balance has come automatically. Current liability also, it was no change. We have taken as it is. So then we have added here 720 was there, and here we have adjusted value was 760. 720 plus 760, 1480 has come. Goodwill, it was 60 and or 100. It depends on what NCA we are taking. Okay, the NCA can be calculated two methods. So here the goodwill is 60 and 100. Already we have discussed a lot about it. Then current asset 500. Then here we have taken from this the second one, 400 is there. So 500 plus 400, it has become the 900. Other equities we have to calculate. Equities, equity share capital they are not given. They are given only other total equity they have given. They have not given the bifurcation of how much is your equity share capital, how much is other equities, that they have not given. They have given as a total as equity. To arrive to the closing equity in the consolidated balance sheet, first we have to find out how much we are getting the share from the subsidiary company. So total profit of the subsidiary company, they have given us 70. Whatever reverted back, we have reverted back for the current asset, that is 60. So the total is 130. In this, we will be getting 60% and the NCA will be getting 40%. So our share is, our means, the holding company share is 78 and NCA share is 52 out of post acquisition profit. So we have found out what is the closing NCA. NCA on the date of reporting, that is balance sheet date, we have calculated. If you take the NCA is 200, opening NCA 200, then add 52 to 52, you get it. If you take the NCA as 240, add 52, you get a 292. Both ways it will be tallied. Then closing equity we have taken here. So it is equity of P Limited 920. Add what the share you have received, post acquisition share you have received from subsidiary, 920 plus 78, 998 as well. This 998 reflected here, we have taken here. Working note 3. And working note 2 is for the NCA, we have calculated this. And other things are just you see this. And if you are not getting, let me know. Are you getting this?
Problem, total comprehensive income of P is 60. What is the significance of the statement?
Nothing is telling that current year income is, post acquisition income is, for P it is 60 and for yes it is 70. That's it. Otherwise also they don't need to give this. We can, by looking at the balance sheet, we can arrive to this. See what is the equity, opening equity, how much? 500 for P Limited. Closing equity is, opening equity, see from here, opening equity was, how much it was? Opening equity was 680. Closing equity is opening equity 500 was there, plus 300 we have issued, because this is 500 is before issuing the consideration to S Limited. So on the date of acquisition, how much it was there? On the date of acquisition, we have made the balance sheet. P Limited on 1/4/2007. The equity was 860. The equity was 860 on 1/4/2017. Now how much it has become? It is now 500 plus 300, 800, and this has become 920. 920. What is the difference? Tell me now. 500, it was, earlier it was how much? 860. Now it has become 920. How much is the profit? Opening equity was 860. Is it the pointer is there at 860. Are you getting this? Opening equity was 860. Henna? This one. The pointer is there. Be able to see? Okay, 860 is there. And closing equity is how much? 920. Closing equity is 920. So what is the difference? Difference is 60. That is the profit by P Limited. Similarly, if you see 1/4/2017, S Limited equity is 300. S Limited equity is 300. And end of the year, S Limited equity is 370. Starting of the year, it was 300. End of the year, it was 370. Yes, Anand, could you able to see? Anand,
Sir.
could you able to see here? 300 rupees
Yes.
opening equity. Closing equity for S Limited is 370. Isn't it? Equity on 1/4/2017, S Limited, how much? Anand, everybody is getting this? Okay, right. So opening, so the difference is 70. So they need not to tell here that this is the profit for the current year. However, they have given, okay, it is all right. Okay, but still we have to check this. So we need not to go as per this. We have to check all these things. If this is different, then why it is different, then not the late part of the this one it will be coming. So in the analysis, we have taken 60 rupees, 70 rupees is the post acquisition profit, and reverted back the current asset is 60. So the total value is 130. 130, how much is the share of subsidiary and NCI, and how much is the share of holding company? We have got it. Add this 78 with the equity of the holding company. Add this profit, share of profit with the NCI. We will be getting the closing. See here, that is what we have done. So here NCA 250 to 92, this is 920. Here we have NCA 200 plus this 52, 200 plus this 52, 200 plus this 52, 200 plus 52, 252 it has become. And for this one, this 78 we have added. Okay. So this we have got it, and you get the closing equity, consolidated equity you get. Consolidated. Equity. Consolidated. This is consolidated. Total NCA. Total non-controlling interest we got it. Okay. So these are the two things we have taken. We have added that we have taken here. 998 and 998. Okay. So there is a little bit network problem. So this is the way we have done it. Getting it? Yes, friends. Sheetal got it. Others? Anybody has any doubt? Still? Can I go for the next problem? Okay, no one has any doubt. So I'm going to next problem, problem number 3. Okay. Yes, Sheetal, please kindly read it.
The following are the extract balance sheet of H&S Company as on 31st March 2016. On the asset side, we have tangible fixed assets, current assets, and shares in S Limited. On the liability side, we have share capital, general reserve, profit and loss account, in brackets, it's given 1st April 2015. 12% debentures, sundry creditors, and profit for the year. They've given additionally that H Limited acquired shares in S Limited on 1st October 2015. S Limited has a balance of rupees 4,000 in general reserve on 1st April 2015. On the account of fire, goods costing rupees 2,000 of S Limited were destroyed in June 2015. The loss has been charged to profit and loss account for the year. They are required to prepare a consolidated balance sheet.
Okay, right. Right. So here, what is the difference? Whatever we have done till now, and this problem, we have done only two problems, of course. Zyada problem nahi kiya. But what is the difference? There is a very significant difference between the other two problems and this problem. Yes, any one of you. The other two problems they have given the opening balance sheet, date of acquisition balance sheet was given. Here that is not given. That is the first one. Significant difference. Another one is it is mid-year purchase. So it is in between problems they have given. The date of acquisition was accounting financial year. There was no problem to do that type of things. But here they have given segregation, post and adjustment, everything we need to do it. Yes, you're right. They have given mid-year purchase. My sharing is not happening. No problem. Will थोड़ी देर पे ठीक हो जाएगा. Should be all right. I say once again, I'll try it. No. Okay. So how we have to do a little bit till here date of acquisition first. Date of acquisition is 1/10/2017. Right? No, 2015. 1/10/2015. Then share of proportion we have to take share of control. So here H Limited so there H Limited has 8,000 shares. So 80% and non-controlling interest S Limited will be 20%. This is the second one. So we have to calculate a pre-acquisition profit kitna hai, that we have to do it. S Limited acquired shares of S Limited on 1/10/2015. S Limited has the balance of 4,000 general reserve. 2015 on account of fire costing 2,000 115 on account of fire goods costing 2,000 was limited where S Limited was destroyed in June 2015 and the loss has been charged to profit and loss account for the year. But we have the balance sheet end of the year. On the reporting date balance sheet we have. We don't have the balance sheet on the date of acquisition. Some information they have given. So the first thing we have to go for the analysis of profit. Analysis of profit. You can take it as profit for the year 2015-16. How much niche they have given? Profit for the year is 6,000 rupees they had given. Okay. Okay. And transfer to general reserve, because general reserve on the date of acquisition it was 4,000 they had given, and end of the year they had given us 5,000. So 1,000 rupees. This is 5,000 minus 4,000. We got this. Okay. Now the another one is loss by fire. Debited to profit and loss. Loss by fire debited to profit and loss account 2,000. So the total is 9,000. So this is profit before adjusting loss by fire. In this, we have to find out what is pre-acquisition, what is post-acquisition profit. That we have to see. Pre-acquisition profit and the post-acquisition profit. So 4,500, 4,500, because we have joined on 1/10/2015. That is after 6 months of from the starting of the year. So for 6 months post acquisition, and okay. So now the acquisition profit. Okay. General reserve. General reserve was 4,000. Okay. And P&L account. On 1/4/2015, how much it was that I give? 4,000 was there. And profit. To 30s. 4,500 is there. Less loss by fire in June 2015. That is the reason we have taken this year. This entire loss is to be considered for June. Pre-acquisition to consider, because this has been occurred before acquisition, so it will go to pre-acquisition. So that's the reason we are minusing from here. That is the reason we have added back, found out what before loss by fire. So we have taken this, and this loss by fire we supposed to subtract it from 45. Okay. So now how much is this total? 8,500 minus this 6,500. So this has become 10,500. Getting this? Any doubt? Yes. We have found out first how much is the profit pre-acquisition, post-acquisition profit. How much is that we have found? Pre-acquisition profit, post-acquisition profit we have found out. Any doubt in this? Are you getting this? Are you getting this?
Yes, sir.
Any doubt? Okay, right. Now tell me how to find out what is the fair value. Nothing is given. Here they say that 10,000 is one thing. 10,000 they have given. So there is a consideration. So with the 10,000 we can find out what is the fair value based on the fair value method. 10,000 is 80%. How much? 100%. Then find out what is 20%. That you can find out one thing. दूसरा proportionate net asset method also we have to find out to get the fair value of the assets. So how can we find out that? So this is other equities. Other equities. Two approaches. One is asset side approach. In that we take all the assets minus outside liabilities we do it. Another one is liability side approach. The liability side approach, what we equity and liability approach, we do equity share capital plus other equities plus increase in the valuation minus decrease in the revaluation. That is a fair value. Increase in the fair value minus decrease in the fair value of the asset. करने से आपको मिल जाता है. So we are going to do that because we are given with the closing. We are given with the closing balance sheet. Okay, right. Calculation of net asset. Calculation of net asset. Pre-acquisition. Why we need this? Because we have to find out what is the value of NCA. So what is the value of NCA? We have to find out. So that's the reason we are finding out how much is this. Okay. Equity share capital. How much is and your pre-acquisition net asset pre-acquisition of S Limited. Okay. Equity share capital, how much it was? 10,000. Add pre-acquisition equity. We have just calculated pre-acquisition equity is 10,500. So this is identifiable net asset 20,500. So why should we do it? We have to calculate the non-controlling interest. For that purpose, we are doing all these things. Okay. And now calculation of non-controlling interest on the date of acquisition. Two methods are there. One is share of identifiable net asset method. Proportionate share of net asset method or simply share of identifiable net asset method. We say. So in this identifiable net asset is, so NCA will be 20,500. This is the identifiable net asset into 20 by 100. How much is this? 10,250. 2500, 2100 to is 4100. This is one. Okay. And then is fair value method. So that is now you see that this one 10,000 they are given for 80. Purchase consideration is 10,000 for 80%. Now how much is 20%? So this becomes rupees 2500. So there are two values are there for the NCA. One is 4100. Another one is okay. This is we have to find out closing NCA calculation of closing NCA. Okay, opening NCA is two values are there. One is 4100, another one is 2500. Add share of post acquisition equity. So हमारा post acquisition profit is post acquisition profit is how much? 4500. Post acquisition equity is 4500. So 4500 into 20%. So this will be 900. 900. Closing non-controlling interest will be 5,000 and this is 5,400. Okay. Other equities. Calculation of other equities on 31st March 2016. Ah, right. So equities, other equities, which one? H limited. General reserve. H limited general reserve is 10,000. Here will be 5,000 plus 10,000. 5,000 plus 2. Total हो गया ये 15,000. So this is 25,000. Post acquisition profit. Yes, limited 4,500 into 80%. 4,500 into 80% is 3,600. You get 28,600. But in this problem, we will be getting the bargain purchase that is also to be added. So first, let us make the entries, general entries. An entry to holding companies. See, the previous two problem, they issued the equity shares. Nothing is issued here. So the equity share capital will not change, it will, because there is no information available. Okay, so it is paid by cash. That is what we have to understand. So the HF number, debit, credit, rupees. Entry भी हम बना नहीं सकता है. The reason is because we don't have fair value on the date of acquisition. So we'll be finding out what is that. Okay. Why not? Yes, we can make it. In books of perimeter. Okay. Particulars, portfolio number, debit, credit. Can we make the entry? Any possibilities are there to make the entry? Any one of you? How can we make the entry? We don't have any information on the date of acquisition. No one is telling. Okay, right. This is the way we'll be making the entry. Net asset account debit. How much we have calculated that net asset identified net assets are 20,500. So this is 20,500 to NCI. NCI value we have calculated here. NCI, there are two values are there. Calculation of NCI, this is one, this is two, this is three, four. Right. So NCA is how much? NCA we have calculated as per two. One is 4100, another one is 2500. Okay. 4100. Another one is 2500. Consideration. Consideration we have paid 10,000. Consideration we have paid 10,000. So we have gain on borrowing purchase. Gain on borrowing purchase. So 20,500 minus 14,100 is 6,400.
Is this in the books of H Limited?
Yeah, it is the books of H Limited.
You've written P Limited, sir, on top.
I changed it. It is coming little later because
Oh, sorry.
there is a because it is not sharing immediately. There is a problem, net problem, connectivity problem. Okay. Right, if it is 20,500 minus 12,500, 8,000. Another gain on bargain purchase is 8,000. So here, gain on bargain purchase also we have to add in the other equities. Okay. Okay. Now, add gain on bargain purchase. 200 and 8,000. So your closing equity will be according to this, will be different. So 25,000, 28,600, 28,600 plus 6,400, that is 35,000. Mm, 28,600 plus 8,000, 36,600. We have done everything. Now we can go for the consolidated balance sheet. Go for the consolidated. Okay, got this, Anji? Getting it? Any doubt? Any doubt?
No, sir.
Okay, we'll go for now the balance sheet, consolidated balance sheet. Only at the end of the year we can make it. Okay. In the books of S Limited. Balance sheet is on close of 31st March 2016. Standalone. Okay, right. Let us go for this. The standalone, you will not have any problem. First is asset side. Assets. Current assets. Fixed assets. You have fixed assets. Second, current assets. Next is current assets. Your financial assets. Investment in S Limited. That is 10,000. Assets. Current assets are okay. This will be the total of balance sheet. Okay. liabilities. Share capital, other equities, non-controlling interest, non-current liabilities, borrowings. % debentures. Financial liability borrowings 12% debentures, that is 20,000. Okay. Then current liability, financial liability, trade payables. Trade payables are 10,000. Now let us go for the consolidated balance sheet. So this will be 30,000 plus 15,000. This has become 1,000. This will not be coming. Current assets will be 10,000. That's nil. My goodness, there is no current assets here. 10,000, sorry, plus 25,000. Shares 10,000, this is 35,000. Current assets were 35,000. 35,000 plus 25,000. That is 60,000. Okay. Share capital here we have 20,000. Other equities 10,000 plus 5,000 plus 10,000. How much is this? 10,000 plus 5,000. 10,000 plus 5,000 plus 10,000. Plus gain on bargain purchase, how much is 6,400 plus 6,400. ये हो गया है 51,400 और 10,000 plus 5,000 plus 8,000 10,000. ये हो गया 43,000. You need not to take this. Whatever is there, just you take it. It's the end of it. Take it in the consolidate. So here, general reserve 10,000 plus 5,000 plus 10,000. कितना हो गया है 25,000 rupees. Other equities 45,000. Right now go to this 50 plus 10 40, 40 plus 35 75,000. This is also 75,000. Let us do the consolidated balance sheet. The consolidated balance sheet, share capital, there will be any change. And the other equity, it will be, other equities are we already taken here. Other equities will be 35,000 or 36,600. 55,000 or 56,600. Okay. Then your NCA NCA calculated here. Closing NCA is 5,000 or 3,400. 5,000 or 3,400. Okay. And borrowings will be 20,000 plus 10,000. So this is 30,000. And trade payable is 10,000 plus 6,000. 16,000. How much the total? 45 plus 65, 1,05,000. Then here 20,000 plus 45,000 plus 5,000 plus 30,000 plus 60,000. 1,06,000. Here 7,000 is the difference. 20,000, that is right. Is the difference here. So it is 34,600. Twenty-eight 600 plus 6,000 is 34,600. Taken here. Gain on bargain purchase, how much it was? Gain on bargain purchase was 6,400. 8,000. 28,600. Yes, this total is strands. One just 28,600 plus 6,000. Gain on bargain purchase 6,000, 8,000. This total is how much we have got here. 50,500. Just a minute, please. $6,400 NCA will be 4,100 plus 900 is 5,000. 5,000. So it's 6,400. We take a look at 6,400. Gain on bargain purchase 28,600 plus 6,100 is 35,000. How much the balance sheet they're giving? What is the mistake I have done here? Other equities, 35,000, okay. And the NCI is 5,000, 30,000.
Trade creditors is 10,000 plus 5,000.
Yeah, I have taken the profit and loss one. That is the mistake. So this is 15,000. This is 15,000. So here, morning only I have done this problem with the other group. 35,000 plus 5,000 plus 30,000 plus 15,000. So you get the 1,05,000. This is one thing, 1,05,000. The other one will be same thing will be getting. Other one will be same thing. It will be getting 20,000 plus 30 plus 3,400 plus 45,000. So that is also coming 1,05,000 only. Okay, so this is the way we will be doing it, and it depends on the value of NCI. There might be two different things. Okay, are you getting this? Are you getting this? What we have done? You have to go and work out now. Whatever we have done here, please kindly go and pen down. This problem number 3. It is a mid-year purchase, and date of acquisition is 1/10/2015. We started with the share capital and analysis of profit we have done, because what is current year profit, pre-acquisition profit we have to find out. So calculation of pre-acquisition profit we have to find out. So pre-acquisition profit will be whatever the profit on 1/4/2015 plus profit up to 30th September 2015, before the date of purchase. We have bought it on 1/10/2015. So whatever the profits are there up to 30th September 2015, that we have to consider. So for that purpose, current year profit we have taken, we have arrived 6 months, 4,500. This is the profit 1/4/2015 to 30th September 2015. This is the profit. And this profit is for 1/10/2015 to 2016. Next 6 months. So this is the post-acquisition profit. So pre-acquisition profit we have added whatever.
Sir, it is
Yes, sir.
assumed that profit is evenly scattered throughout the year, na?
When thing is said, that is the way we have.
Okay, sir. Thank you,
There
sir.
was only one variability, that was the loss was happened first half year pay हुआ था.
Okay, sir.
First half year pay, June pay, in the month of June, that comes falls pre-acquisition. So that we have separately considered 2,000 rupees. So we have arrived at the equities, pre-acquisition equities 10,500. Why we calculate this? Because we have to find out what is the value of non-controlling interest. We could have gone for fair value method, but what is asked in the problem we never know. If they say very specifically calculate the NCA based on fair value method, or calculate the NCA based on the proportionate identification.
Thank you, sir.
Here we don't have the pre-acquisition net asset, we don't have fair value, we don't have. So we, as per the liability side approach, that we have taken equity, share capital plus pre-acquisition equity, total it. So identifiable net asset we have got 20,500. The NCA value based on that is 4,100. The value based on fair value method is 10,000. We have taken as 80%. How much is going to be? The 20%. So 12,500 100% on that 150 is 2,500. So 2,500. So both the values are correct, because nothing is specified here which way we have to calculate. So we have calculated that. Then we have to find out what is the closing NCA. Opening NCA we have got it. Closing NCA we have to get it. Closing NCA will be NCA on the date of acquisition, share of other equities plus share of other equities, we have to add it. So what is share of other equities that we have calculated here? So we have got this, and how much is the other equities are that we have calculated, and the post acquisition profit is the 900 and 900. So we have added and we got the what is closing NCA. There are two NCAs are there because of two different NCAs. One is the fair value method, other one is proportionate identifiable net asset method. So दोनों का value definitely different होगा, right? Then closing equity for the P Limited consolidated. This one we have calculated here, and we have made the balance sheet on the data on the reporting date we have made. Okay, so please kindly sit and aram se see it, and I think you will be getting the next class. We will be going little faster because now the basics we have done, and here the illustrations, some illustrations are given up to illustration 11. Up to illustration 11, please kindly go through because I'll be going very fast through areas. Even sometime I may skip it because easily understandable those areas. So I might skip it and go first right away for the illustration number 12 in the next class, if you don't have any doubt the previous illustrations. Okay. So, okay, friends, and you know, in our tradition, South India, on the Vijayadashmi day, you're supposed to get the Ashirvad of your Guru, and you have to have the class that day. So, generally, we used to have the class, and today we had the class. I'm very happy we are able to have the class today, and yes, it's a good day. My Ashirvad to all of you, my wishes. Okay. So we'll see it in the next class. And please kindly do register your views, reviews. I'm ending the class with this. See you very soon. Namaste. Good night.
Thank you, sir. Namaskar.
Okay. Any doubt, anyone, before I end the meeting? Any doubt, any one of you? See you.
Sir, clear, sir.
Okay, ji, okay. Ji.